This is what everyone got wrong about Bitcoin's correction. Hey, what's up, guys? Welcome to Crypto on Fire. Daniel Paulino here. And today I want to talk about this article from ambcrypto.com. It's a very interesting article. I just read it through and I'm just going to reread it and then just give you my thoughts as we go. And subscribe to the channel for the most bullish crypto channel on YouTube. So you want to go ahead and subscribe for that, and also hit the like button to support the channel. Now before we get into that, I just want to show you a couple of offers we have going on below. So automated crypto profits, you want to click below for a free beginner guide. There's a beginner guide of the 7 fundamentals of crypto investing, right? These also apply to any kind of investments as well, but is more geared specifically to crypto. So you get access to that free beginner guide by joining my Telegram group, and then you'll see it on the pinned comments. You'll see the 7 fundamentals. You want to read them. I have different articles, different videos in there that you click, and you want to reread them and rewatch them multiple times, because that's how you gain mastery, right? Repetition is how you turn ideas into results. Thinking into results happens by repetition. So you want to keep repeating and repeating those 7 principles that we have in there, and that's a free beginner guide. And also crypto profits while you sleep, right? If you ever wanted to learn how to make crypto profits while you sleep, click the link below. And also if you want to follow me on Instagram, that link is below as well. So thanks for watching, guys. Let's get right into this topic. Now I'm just going to start reading. Accumulation in the Bitcoin market has become a frequently discussed topic while in the crypto community, with the previously subtle reaccumulation pattern expanding. Coins have been shifting from weak hands to strong hands. That is, short-term participants are being seen bartering their new coins to long-term holders. Now, guys, you do not want to be in that, the short-term investors, the ones selling right now. You do not want to be that. You want to be the hodler. That's what we're doing right now. We're buying and holding for the long term. Now obviously we believe in this channel, without going into too much details, that Bitcoin will 100x in the long term. I'm not saying that it's going to happen right now. I'm not going to say it's going to happen immediately. If you click the video, it's possible that if you hit the like button, it could go up 100x, but it's not guaranteed. Now obviously I'm joking about that, not financial advice. But let's keep reading. You definitely want to look at this as long term, guys. Do not invest money that you need to pay your bills. Do not even do that. If you need to pay your bills, if you need the money 5 years from now, you shouldn't even be investing, right? If you're in debt, I don't even recommend you invest if you're in debt. Now you have people that are more extreme. They recommend you borrow money. Now I'm not in that boat. I know Michael Saylor recommends borrow as much as you can, as long as it's at a good interest. He does that for his company, but myself, I'm not doing that. I'm only buying based on my income, a certain percentage based on my income. Not everyone is Michael Saylor, right? Now, but let's keep reading. That, coupled with the return of miners to the scene on on-chain metrics, pointing to a strong 29% hash power coming back online, marked an interesting development in the space. What's more, this recent change in investor behavior could also have been seen elsewhere in Bitcoin's liveliness dropped to April mid-levels. So you have this chart right here. If you want to look at the screen, hold it out for a couple of seconds there. You could pause if you want to analyze it a bit. But let's keep reading. The metric in question provides a macro view of the overall on-chain activity and utilization relative to the network's lifespan, since it takes into account coin days destroyed, CDB, global CDB, and utilization. It provides an interesting insight into the larger market. Bitcoin's slumping liveliness on the 7-day moving average chart pointed toward more market dormancy and an increased accumulation and holding patterns. The same was highlighted in recent articles. Via a recent Twitter thread, Coinometrics also spotted this trend and correlated with the Bitcoin's halving in large whalefish sentiment. As per its data, Bitcoin witnessed a reset in investor behavior around the 33K mark, and this trend is now likely to spark an upward trend in the charts. Right now, on the 428th day after the third Bitcoin halving, cryptocurrency is still oscillating under the 32K level. Further, a look on the on-chain data suggests that Bitcoin is resetting after its big correction that took us from 64K all the way down to 30K. The only way is up for BTC if hodlers continue accumulating coins. So this is something beautiful, guys. Now, obviously, we know that the newbie investors, the people that lose money, they left, they ran away, they blew away with the wind. Cast away with fables and with every wind of doctrine, the way that that's written in the scriptures, right? They just cast to and fro, not allowing them to be planted and cemented, and knowing that the grass is greener wherever the hell we are. If you're a Bitcoin holder, the grass is greener. That's all you need to know. Now, obviously, we know that there's money in every business, but cryptocurrency is a little tiny market compared to every other market. Now, we know that the gold market is 10 trillion. The bonds market is 100 trillion. What the stock market, the S&P market, was 30 trillion or something like that. Can't remember what the exact data is. But when it comes to Bitcoin, when it comes to crypto, it's only 1.3 trillion. And when you look at gold market, if you're losing money by holding gold compared to crypto, you're losing money by holding bonds compared to inflation, right? Bonds, and those are markets that are 10 times, 100 times bigger, while Bitcoin is only like 1% of that, and it's making way more money at what's the average 200% return a year since its exemption? I don't even know how to pronounce it. So what that means is that we're a tiny market, guys. We have a lot of growth potential. So let's keep reading. That's why my favorite phrase is the more you learn, the more you earn. That's why you need to click the links below. Get started, start studying, start learning. The more you learn, the more you earn. You haven't earned more because you don't learn more. That's why you need to click the link below. Coin intriguing data highlights fresh demand. Click the link below. Hit the like button to show some support for the channel. I feel like I'm closing hard here. Anyways, Coinometrics also looked at who bought the coin since the start of the largest bull run in October. Presented that a major chain is afoot compared to the last year. At the start, it was smaller investors, or the so-called small fish, who were accumulating with Bitcoin past its previous all-time high of 20K, railing to a new peak of 64K. Larger investors, on the contrary, began selling at 20K. Albeit it not in quantity sufficient enough to end the bull market. Whales, on the other hand, added selling pressure on Bitcoin, hit 30K for the first time. This is what resulted in the tripping point following May's highs. I keep scrolling. A aforementioned Twitter thread forward discussed the accumulation by stating that apparently 30K is a new key that stopped the trend of coin accumulation by whales. When you look at the price action around this time, you can see that we were growing very fast. So fast that the growth trajectory started to catch up with a log average trajectory. So obviously what you were seeing is that the whales, they stopped buying at around 30K, 20K. They actually started selling, taking profit, while the price doubled with newbie investors. So apparently what potentially happened was that once it got to the 30 grand, a lot of the whales, they started to probably put on marketing promotions on there on TV to attract new investors, while at the same time they sold and got out, hoping to buy in at a lower level, which they could potentially be waiting for even lower levels to buy back in. Now obviously, it's very solid right now at 30K. We don't know what's gonna happen. I don't think it's gonna go under 20K, but obviously for me it's a buying zone. 30 grand is a buying zone. Anything below that is definitely a buying zone. Now when it starts to get to, once it gets past 42K, 42,000, then I think 43K, then I believe it's gonna be back to the bull market. That's when I believe that the selling pressure has been taken off, and I believe that it's just gonna start to accumulate more and more from there. Now, for the unprecedented selling pressure could be further correlated to the whale sentiment and the fact that Bitcoin was gaining too much too soon, right? So now I agree with this. I was a little bit scared when it was growing so much so quick, and I wasn't really buying at that price. Now I didn't sell, I didn't really sell. I just held. Man, it looks like there's a fish right there. Anyways, I don't know if that fish is dead or is chilling. Anyways, too much too soon. This deemed the market unsustainable amid its many floods. As per data, now that 30K level is a missed return, cold feet are nowhere to be found, and both small and big investors are back in the game. Finding concluded by asserting, if that interpretation is correct, then what we had was a correction. With this correction is a reset. Would that trend of accumulation continue? There's only one direction Bitcoin can go, and that's up. Simply put, most have been wrong about what these corrections have been. They were a reset for Bitcoin, so they was just simply a reset. Now it looks like this thing just froze right here. Close. Let me see if I could reopen it. Movie. Boom. Now we're talking. Now we're talking. So let's keep scrolling here. Oh, I gotta make it float, I guess. I'll edit this later. View, float to top. There you go, baby. This counter argument is nothing short of breath of fresh air in the BTC market amid its recent price drop. Consolidation and general bearish tone. On the 7-day moving average chart, ASO saw a major spike on July 12th, a spike indicating that the movement of altcoins, both ASOL and MSOL, were holding above their June mid-levels, highlighted the dominance of older coins in the market. Guys, so I think this is the last part of this article. While anticipating major price movement at this point will be too optimistic, many in the community continue to hope for steady northbound action around after a major correction, and mentioned metrics will do little to dissuade these expectations. So guys, hope you guys enjoyed this video. Hope I inspired you, gave you some knowledge. If you guys want to learn further about what's going on in the crypto market, what you should be doing right now, automated crypto profits, click the link below. Free beginner guide, get that by clicking the link below. Crypto profits while you sleep, click the link below. And if you guys want to follow me on Instagram, the link for that is below. So hit the like button, subscribe to the channel for more sort of video. Thank you for watching. See you on the next one.